Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, November 4th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 p.m. in Bermuda, and Mexico City it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. 30 years ago today, the American embassy in Tehran was taken over by Iranian militants. Some 55-plus captives, diplomatic personnel, were held hostage for up to 3 years. Today, in a protest, actually a demonstration commemorating the 30th anniversary, riots broke out between the regime's police force and those protesting against the regime, calling for increased democracy. Tear gas was thrown, rubber bullets were fired. 14 years ago today, on this date in 1995, Israeli Prime Minister Yitzhak Shamir was killed. We had an election yesterday here in New Jersey. The Republican nominee won. Chris Christie is the governor-elect, and also in Virginia, the Republican nominee won as well. Now to our main news. A low-cost aircraft carrier, Ryanair, based in Britain, has decided to move its insurance broker from Aon to Marsh. This has been reported by Reinsurance magazine late yesterday. Ryanair is actually based in Dublin. It's owned by a rather charismatic individual. It's not known how much brokerage Aon will lose. It's believed that one of the key attractions of the deal was the Dublin-based office of Marsh. Ryan has over 200 jets. Serves most of Western Europe from a hub in London and Dublin, operating as a low-cost carrier. Both Marsh and Aon declined to comment. Marsh came out with their own numbers. The holding company for Guy Carpenter has reported third quarter consolidated revenue of $2.5 billion. It's down 11% from this period last year. On an underlying basis, the revenue drop was a more modest 7%. The efficiency drives that Brian Duperreault has instituted at its core broking business means that Marsh reported net income of $220 million for the quarter. This compares with a net loss of $8 million for the same period last year, so they actually did very well. Just as it did in the second quarter of this year, the New York-based insurance broker was able to slash costs faster than its revenue declined during the quarter, helping it to post a better-than-expected profit. Of course, ongoing weakness in the global economy continues to hurt Marsh and their consulting and risk consulting business, and also the steadfastness of premium rates continues to hurt Marsh. Some of the premium rates are actually going down. Marsh earned $221 million, or 41 cents a share, as compared to 2 cents a share for the same period last year. So Guy Carpenter, apparently, from what we can tell, earned operating income of $127 million in the quarter, compared with a loss of $28 million during the same period a year ago. So that's pretty good news for Carpenter. Further to the north in Hartford, they came out with their numbers. They've cut their loss for the third quarter fairly significantly. Hartford, of course, was helped out with a $3.4 billion cash injection by the federal government. They said that their net loss fell to $220 million for this past quarter, compared to $2.6 billion in the third quarter of last year. Core earnings from operations rose to $660 million from a loss of $422 million. These earnings vastly beat Wall Street's expectations. Analysts have been expecting earnings of $1.11 a share. Hartford came in at $1.56. This is all good news for Liam McGee, the new CEO up there. He said the Hartford's third quarter core earnings demonstrate a resilient company that is emerging from the challenges of the last 18 months. Written premiums for the Hartford's P&C operations were $2.4 billion, down 6% from the third quarter last year, mainly due to weaker economic conditions that particularly affected commercial lines. The insurer raised its 2009 guidance sharply. They now expect 2009 operating earnings of 85 cents to $1.05 a share. Quite a turnaround. French reinsurer SCOR reported from La Défense in Paris a net income of 278 million euros for the first 9 months of the year. That comes out to about 410 million US. compared with a little bit more than that, $280 million in the same period last year. Gross written premiums in life and non-life combined were 4.9 billion euros, up from 4.3 billion euros, with non-life premiums rising to 2.5 from 2.3 billion euros. The combined ratio improved to 97.4% and had been 99+% for the first 9 months last year. They got hit on the net return on investments. That dropped from 3% last year to 2.1% this year. They say it's mainly because of a cautious asset management strategy. Interestingly enough, SCOR Global Life has now emerged as a significant part of the company's operations, as the non-life division reported a year-to-date operating margin of 5.2% on premiums, up 20.4% on last year. SCOR is bullish on January 2010 renewals, certainly compared to predictions coming from Swiss Re. SCOR said that the recent crisis has had more of an economic impact on the capital of insurers than on reinsurers, and as a result, they expect demand for capacity to remain high in the face of a relatively stable offer from reinsurers. Another insurance broker made some news, Frank Crystal and Company. The president and chief operating officer of U.S.-based independent retail insurance brokerage Frank Crystal and Company has left the company. This is according to the Insurance Insider. Mark Freitas, F-R-E-I-T-A-S, left the New York headquartered company following an October 30th management reshuffle that eliminated the roles of president and chief operating officer and established a new executive committee to manage day-to-day operations and long-term strategy. An executive committee to manage day-to-day operations. The committee is led by Chairman and CEO James Crystal. Yes, his name is over the door. It includes executives from the firm's key business areas. The stock market in the U.S. is up about 130 points now. The Fed is coming out with their quarterly, actually their monthly minutes later on today. It's not expected there's going to be any interest rate increase, so the market is expecting it. Now we'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
Our friends at Risk Management Solutions, RMS, out in Newark, California, have come out with one of their what-ifs. This one is particularly interesting. If the 1908 asteroid explosion that hit Siberia was to occur above Manhattan today, it would cost over $1 trillion in property loss and 3.2 million deaths. Here's a picture of Siberia after the comet landed in the Tunguska forest in central Siberia. RMS said that its estimates superimposed the damage footprint of the 1908 blast, which saw a comet explode about 3 miles above the Earth over Siberia. It leveled trees within a 770 square mile area.